What does a VA loan look like in terms of credit, loan terms, escrows, et cetera, et cetera, et cetera? Hey everybody, thanks so much for joining me. I am Jeff, the Mortgage Pro, and today we're looking at one of my favorite topics. As I mentioned on every single video about these types of loans, we are looking at VA home loans today. So we're going to break down some different things to look at. What does a VA home loan actually look like? So the first thing we're going to jump right into here is credit requirements. So on a VA loan, there's actually no credit requirements set forth by VA. But oftentimes lenders will have a minimum credit score. So for example, the minimum credit score that my company will look at on VA loans is 580. The better your credit is on these, the easier it is to get qualified for the most part. But that doesn't mean that you can't qualify with a lower credit score. So always, by all means, apply. And if your credit is a little bit on the low side, we can do things to help you get that up, which would only improve your situation going forward in terms of qualifications for a VA loan. So credit requirements, they definitely vary, but make sure that you have at least a 580 score if you're going to try to apply for a VA loan. What do loan terms look like on a VA loan? So typically VA loans are issued for 30 years or for 15 years. And the shorter term loans will actually have a lower interest rate, but because they are amortized over a shorter amount of time, the monthly payment is going to be higher. So remember that mortgages, I don't know if we've ever talked about this before, but you could do some research on this for yourself, but mortgages are actually front-end interest loaded because of the way they are amortized over time. So for the first 10 years of a loan, the majority of your monthly payment is going to be going towards the interest portion of your loan. And then after 10 years, for the last 20 years of a loan, if you have a 30-year loan, then the remaining 20 years is going to be mostly towards principal on your loan. So interesting kind of fact there that mortgages are front-end interest loaded. VA loans have two different options. They are fixed loans. Those are a 30-year fixed or a 15-year fixed option. These are by far the most common VA loan options out there. They have a set principal and interest payment throughout the life of the loan, and no matter how the rate changes nationally, if you're locked into that particular interest rate, that's the monthly payment that you're going to be, your monthly payment is going to be based on. So payment may go up slightly due to local property taxes, though, in some instances, and insurance increases over time. So even if you have a fixed rate loan, it can change a little bit, just a little bit because of those property tax changes and insurance changes. It could also go down a little bit too. So if property taxes ever go down, which I've never heard of, or interest actually goes down, or insurance actually goes down, which I've also never heard of, your payment could actually go down, but it could. And then the other type of loan that a VA loan is associated with is an ARM loan, an adjustable rate mortgage. This can be in a term like a 5-year adjustable or a 7-year adjustable ARM loan. So your interest rate is adjustable periodically based on the index. So if you have a 5-1 ARM, for example, your loan would be fixed for 5 years, and then it would adjust every year after that. If you had a 7-1 ARM, it would be fixed for 7 years, and then it would adjust every year after that. But depending on when that loan would adjust, so if you had a 5-year adjustable rate mortgage, and then after the fixed period of 5 years, it would be based on the index in which that loan is based on. So if that index is higher, then your monthly payment is going to adjust higher. And the same thing with the property taxes and insurance, it could actually go down as well. Does it ever really do that? Not very much, but it could go down. So an adjustable rate mortgage, your payment would adjust at certain points in time with those types of loans. Does a VA loan have a impound or an escrow account? I use those terms interchangeably. They're pretty much mean the same thing, but it means that you have a portion of your property taxes and a portion of your homeowner's insurance that you pay as part of your monthly mortgage payment every single month. And then when those payments actually come due, so for taxes, when those payments come due, there's enough money in that impound or escrow account to pay that for you. So you don't have to worry about making that payment by yourself. So technically your monthly payment seems a little bit higher, but it's higher because the account is paying your taxes and insurance for you when they come due. So this is required on all VA loans. This is where taxes and insurance are put in the account with your lender and paid out of that account to pay for it for you. And then the payment dates that you have on a VA loan, just like any other mortgage loan that are out there, are going to be the first of the month. That's when your payment is due. And then it would be late on the 15th of the month. And if it's after the 15th of the month, then you're going to have to pay a late fee. And then if it's more than 30 days late, then that's going to ding your credit, which is not good going forward. And then that's also going to add even more of a fee when you have to make your next payment the following month, and that first month payment is late. So make sure you payment on time. Payment due date is going to be the first of the month, and then the late payment is going to be on the 15th of the month. So hopefully that gives you an idea about some of the different characteristics of a VA loan, and most loans in general have the same type of ideas here. If you have any questions at all about a VA loan and the structure of that, and I can help you, please make sure you reach out to me, and I look forward to chatting with you on our next show. Hope you have a good one, and we'll talk to you soon. Bye.